All right, ladies and gentlemen, I hope you had a wonderful day. We are going to be sticking to the charts today because I need to show you the bearish bets that have entered into the market. So, yes, Powell is on Wednesday, and this could explain a lot of the jitters. We moved down about 1.9% today on the NASDAQ, 1.3% on the SPY. The Dow Jones kept it below 1%, but even in the midst of this carnage, it didn't feel that big. And actually, before I get anything there, let me just go to the SPX right here and show you, despite all of the movements over the last couple of weeks, there's two technical indicators that are decent right now. One, the S&P is still above that 200-day moving average, but the NASDAQ, that is now below it today. So you pretty much only spent 1 day above the NASDAQ 200-day, and really, you haven't seen that in a very, very long time. So this is where it's going to get interesting, but what I am talking about, it's not on this chart right here. It is what happened with the bond market. So I'm going to get into the main point, but I want to start with this one right here, and this is showing you the aggregate treasuries net commercial futures contracts, and what this means is pretty much the institutions, and it is showing how short they are across the bond curve, aka the whole bond curve from the 3-month all the way down to the 30-year. It is the most short it has ever been. So why is this a warning? Why is this anything bad? Well, the problem is it has moved the Fed futures, and believe it or not, today, the terminal rate being priced in by the Fed futures, it actually went higher. So ever since December, the last couple of weeks here, it has been going lower and lower and lower. This was the game of chicken, and now let me show you another way to understand it. This is the simple way to look at the Fed futures, but if you come down to June and July, what you'll notice is that the higher rate hikes, they've actually moved about 4 or 5% in the other direction, some almost 10%. So why this is important, because out of nowhere today, all of a sudden, all of the bonds are getting a little bit more bearish. You have a lot of hedge funds that are getting bearish on the bonds, and this is saying both the market and everything is going to come down, and that is even saying that the Fed might very well stay higher for longer. Now, do I agree with it? I'm kind of 50-50. I think it all depends on what happens with Powell. I'm still remaining agnostic about it, but here's just a breakdown of the 10-year, and what you're seeing, the non-commercial bonds, the net for retail, it is positive, aka the hedge funds, the commercial ones. These are the guys who are net short. The non-reportables are net long, and you actually look at totable, reportable, and non-reportable, it's showing you positivity. But the one thing I want you to see, very simple, non-commercial, retail, non-hedge funds, non-institutional, they are net long on the 10-year, whereas the commercials, they are all net short. So the point is, today, in the midst of all of this, people are getting ready. You even had China reopen. And actually, let me give you another fun fact here. Even though China came back from the Lunar New Year, they did sell off very, very big. But as we move forward from this week, China is going to be very important. And this is why. Look at this. This is like a, what? I think there's like a 40-year, 50-year chart for Hong Kong. But, like, this goes all the way back there to, like, 2006 and 2007. And if Hong Kong gets above here, that will be breaking its 850-week moving average. So, like we talked about yesterday, there's a lot of reasons to be bullish and bearish. It's unfortunate the NASDAQ kind of slipped. The S&P still holding on. But what could happen here after Powell and all of these earnings? I mean, it truly can get wild. And what I'm trying to highlight here for you is quite simply the Fed futures in the bond market. They kind of blinked today, when over the last couple of weeks, they really haven't. So there's a lot we got to go over. That is going to be the gist of it, but I got a breakdown of all the other plays and what else happened, and we're going to use the charts. So Chad, let me know what you think. If you like this, a little bit less words, even if general, if you want to support the channel, drop your thumbs up on the video and make sure you are subscribed. It helps out the channel, and we are live every single day, and we do this every day for free, baby, because we love y'all. And let me get some contribution. What y'all looking at for tomorrow? But run it, baby.
Walking to the couch, it's the joints on the legs. Live in the hills, but still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
But right off the bat, we're going to jump into how this morning played out. Remember, this was Friday. You went all the way to 4,100 on the futures, right below 4,100 on the SPX. We had that weird sell-off on Friday, and then the futures, believe it or not, they just kept slipping. Again, it was the first day of China, and they didn't do good. They pretty much sold off right off the bat, even though there really wasn't bad news. But then even Bitcoin was up. It turned around, and this was all the way until 3 in the morning. You kind of went up a little bit, and sure enough, cash open. We ripped up for like an hour or so, and then we slowly sold off. So we gave up pretty much the gains of Friday, a little bit extra, and now we're back to really where we were at last week. But there's a lot of individual things that happened, but I'm telling you, the volume was low. It was an overall low day. There was a bunch of different movers like Johnson & Johnson. They dropped 3.8. We saw it happen very, very early on stream, but we weren't able to confirm it till it was already down. This will be a play that I'm going to be looking for, but essentially Johnson & Johnson, a judge ruled that they cannot do that bankruptcy appeal and do the Texas two-step. It even affected 3M. Again, the Texas two-step, these companies, they get sued for a lot, and then they try to move the assets to a different subsidy and then file bankruptcy on the subsidy so they could limit the damages, and the judge was like, nah, you guys can't do that. So it had a very negative effect on both of those companies. That was really, really big this morning, even after hours. Now, I did decide to actually make a play on this. It was Whirlpool. I only grabbed 25 shares. I had 158.50, but what happened, they had earnings. They missed abysmally because they had something to do with the spinoff of like their European units, but then they guided up. It actually led to a decent reaction. And the reason why I went in on it, because I was like, well, they have a lot of upside when you start to pull out the chart, and if they're affirming guidance, that was good. And why I'm bringing this up number 2 now, because you have earnings this week: Apple, Amazon, Google, Meta. And one big trend we've been noticing this earnings season is that the earnings do not matter, my friend. Quite simply, it is all about the commentary, aka the guidance, and what management is saying for the rest of the year, and even just leading into the next quarter as well. So there was that one. I don't have it up here. You also had a NXPI, and this is just word to the point. They beat on their earnings by a little bit, but then they guided barely lower for next quarter, but now they're down 4%. They did raise their dividend, and there was also news after the bell. The U.S. is to end COVID-19 emergency declarations on May 11th, so that could probably come with a lot of things as well, too. But there was that one. You even had Ford. They announced price cuts on their Mach-E, which is wild simply because the Mach-E has not even given them a good margin already. Did kind of help out Tesla a little bit. So you can see they kind of move like Tesla, but not too crazy. And then Snapchat, they have earnings tomorrow. They actually perform pretty good. And I'm just bringing this up because we read over the preview today, and a lot of people are focused on the ad market, and they are using Snap as a bellwether. Even though they did bad, last quarter, Snapchat, they did really, really awful when Meta and Google actually did decent. It was the guidance that killed Meta and Google and the spending and all of that, but people are looking to the ad market here tomorrow, and this one has the potential to move more of the market than you think. So there was that, and keep watching for them. And for good old days, I thought we'd mention a little bit of AMC here because I didn't know this. They actually proposed their plan now to merge AMC and Ape. So I don't want to get this thing wrong. That's why I have this right in for you. I know y'all get sensitive about it, even though we bought it at $5 before everybody in 2020 and sold out at $38. But AMC, the two classes of equity shares, they came closer to converging on Monday after the movie theater disclosed details for proposals of the shareholders to vote at the next meeting. But pretty much what they are saying here is that on March 14th, they plan to hold a vote of the proposal to convert all outstanding Ape units into common shares. But they tied in a poison pill because they also want to do a 10-for-1 reverse stock split and substantially increase the number of common shares so they could issue more in the future. So Ape started going up a little bit, but be careful out there. Again, we bought in at 2020 and we are out. To give you an idea, we started buying, I think it was around like August or so. August 2020, I think we got in below $5. It went down, and then 3-4 months later, all of this happened. So it's pretty much at the same price. The difference is now there's been a lot more dilution and everything else, so be careful out there. And part of everything going on now, there has been a mad dash to the underperforming names at the beginning of the year. Most of this rally so far, if you go look at the performance of stocks that were down in the 90th percentile, those are the names that are up the most, while a lot of leaders from last year, they're the ones that are down here in the first month. So that was pretty much everything. I got a couple of plays, but I forgot to mention this. Here are your levels moving forward. So if I could even wrap up everything, pay attention to the bonds, the Fed futures. The earnings are going to dictate a lot. If you're confused about Powell, go watch yesterday's watch list. We talk about it, but we've been bringing up all of these levels in the morning here, and just what I want you to notice, where we closed today around like 40.16, 40.20, you'll notice as we go down lower and lower, these ranges are very, very tight. I mean, 349 to 400. Look at how many different highs, lows, Fibonacci, round figures, the 200-day moving average, and this is all for the SPX, not the SPY. I mean, that's a lot of levels there for about 40, 50 points, but what I want you to show here, anything above 40.39, this thing starts moving like 12 to 20 points at a time. So there's a lot of upside from here if we get there, and the ranges are big, but we're also going to compete with a lot of different price points we've been at. So screenshot this, keep these levels. They have been very, very helpful, and what you'll notice, most of them are just based off of basic price action, aka where we have been in the last month, last year, and levels where you have seen the market hit a low bounce, hit a high bounce, or even where it has closed at, because it tells you a little bit about how the market is feeling. So hopefully that helps, but now let us get into the plays. So right off the bat, I got 3 different stocks that I'm looking at coming into tomorrow, and I actually made plays on all of these. I'm going to start right here with AMD. I made a play with them. Why? Because tomorrow they have earnings, so my idea was go in a little bit now, sell out beforehand if it gets a pre-earnings run, but if we get a little bit more hawkish or bearish actions at the bonds, this may not work out as well. I grabbed 100 shares in the morning at 74.03, so I think I'm down almost like $1.50 now, but hopefully it's able to bounce and we could sell out tomorrow. I got in decently high. Yeah, I bought the first bounce and then it ended up failing. So not too bad, but we're going to see how it plays out. Definitely watch them. That will be another big earnings. And now you got to factor in the NXPI earnings that we just had as well too. But that is play number 1. Then play number 2. I actually like it, and it barely closed red. It was green for most of the day, but go look at any of the China names. Like Baba was down 5%, 6%, all of that. So I went with BIDU, and the reason was they announced a new chat GBT for China. Pretty much they are working on their own chat GBT. Baidu is the Google of China, so it's looking good. The only problem I have with it is that this thing is up like 70% in the last quarter, but we've played Baidu many, many times. There's actually a lot of upside from here, and it's still at those 2020 levels. So I thought it was quite interesting here, and depending on how this plays out, it was able to outperform today. So if we do get upside with China and what I showed you with the Hang Seng, that could be a good one. So I only grabbed 50 shares because it was a little higher and outperforming. I grabbed 50 shares at 140.43. Hopefully we could flip out of that one. And then the last play that we had up there was Whirlpool. That was the last one that I'm looking to flip tomorrow. But on top of that, the final one I want to give you is Snapchat and Meta. And we've discussed this and we did it last time in a weird way. Meta's already juiced up, but Snapchat reports tomorrow. In a weird way, Snapchat is going to move Meta more than Meta will move Meta. So keep this in mind. This one is going to be a very important one. And then even whatever happens with Snap, we're going to have all these earnings live and see what happens with it. But those are the main plays. As far as everything else, I don't think I have it up here. We were looking at the Zaza, the Fed futures. I got to open up all these. So I got the ES. We lost some gains on it from yesterday, so it's barely up right now. But again, the NQ is no longer up 25,000. So gave up 2,000 to make 6,000. I'm sure you guys are familiar with the range it's been moving. Then we have the bond /ZN. That was down 1,800 now, which is not good at all. So we're going to see, and we even talked about it today, and this is what I'm saying. You had hawkish, bearish bond action today, and that top we called out earlier ended up holding. So let's see where we move from here. But really, Powell is going to move everything. And I know we're talking about a lot about plays. I'm talking about the bonds, but I hope you all realize whatever we're going to deal with Powell, that has the potential to really, really move the markets a lot. So keep that one in mind. Still in that one. Here is the AMD, so I'm down 150 on that one. Someone asked me, I still have XLU and even XLB. They're both down like $100 to $200. XLB was like my ghetto short on the Dow, and XLU, if we get more risk off, I'm hoping that one will pay out. But I kind of plan to hold that one throughout the year, especially if earnings or Powell ends up clapping anything. So keep that one in mind. Still down on the Boeings. We're down like $10 a share or $20. It's on 50 shares. I have room to average down on it, but really watching to see if it breaks 205 again. Still in that one. I also still have my Amazon pre-earning shares, which I'm going to be looking to flip. Got about $2 per share on there. We're going to see. The plan would be sell out before the earnings. And then the final play, I do have a little bit more than just this one, but Oxy, this one flipped negative today out of nowhere here. So Energy, they got kind of clapped a little bit, but I'm still cool with holding this, and hopefully XOM earnings and all that will have an effect tomorrow, and we'll see. And on top of that, you're also going to be getting Caterpillar tomorrow and a bunch of other value names. So this could change the trajectory of some things, but all in all, the market is heating up. It's the biggest week of earnings, and you have Powell, and things are about to go crazy. So I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure Hydrate Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, baby, faithful and capable. You have the potential. Stick to your guns. Don't get emotional, and the way you don't get emotional is controlling your budget. Don't find that offensive. If it finds you offensive, man, you may be able to look deeper and see, is there something we can improve on? But Chad, I love you all. This is all here to help you. You let me know if you need anything, but I need you in the game, and not just right now, not just next month, but for a very long time, because it's the long term, baby. But Chad, I love you. Drink that water. Stay hydrated. Stay healthy. And get ready, baby. We got a big week ahead, and get ready for Powell hard.